Good morning, Tuesday, September 26th, 2023, Life Market. Market is at 10 o'clock, for half an hour already. Right now, it's 10 o'clock, New York time. Market been open for half an hour, and the Donchian it fell more than 100 points on Tuesday, adding to September loss, but which is only 0.5%. Okay, so going right into it is Lee. Well, Lee yesterday gapped down and put my option play in our pain, but that's fine. That's part nature of selling options. Sometimes it doesn't go for you right away. You have to wait for it to sort it out. And why did Lee Auto stocks in 10% on Monday yesterday? Why did it lost 10% as volume? Well, simply put, news came out, Huawei decided to enter and start making EV cars in the already crowded market, and they expect start selling a new electric vehicle next month. Okay, so it's a lot of talk, and who knows, right? But it's already crowded market, already kind of like a economy. The China recovery post-COVID is not robust at all. At this point, it is pretty tempered in that sense. So they're not doing too well economic-wise, and you're pumping out more of these in a already crowded market. So all the China-based Chinese electric car company like Li, Leo, BYD, yeah, they all gonna have a little, well, not just a little, it's gonna experience pressure on the sales. While Huawei and Chery had a joint venture basically called Luxeed, and they aim at deflating Tesla. So they're gonna pump out a new vehicle S7, which is based on Chery's own E0X platform, which is supposed to be superior to Model X in various aspects, but it's all speculation, it's all talk until it hit the road, and then people been using it for a while, and then you see how it's going to even be a competitor at all. A lot of hype. But that cut into the whole Chinese electric car market. So, yeah, they experienced some substantial drop yesterday. And now they're just flatlining. Expand. Nothing for expand. Neo, you have the gap. Yeah, depressed it. Neo. BYD did that. Came right back today. Look at that. So BYD. So I have holding across these four. So the other Neo and Lee are the weaker one. BYD I'm expecting now. It's a stronger one. Lee, I didn't expect that to happen, but it happens sometimes. So very right here, put a bottom. Maybe not, right? We'll have to see. I mean, the trade is still very early. You still have a whole month to go, 4 weeks to go before expiration. So all I need for it to do is either flat lying around here or just make a nice spike, and I would close the trade. Am I going to add, like, if it does, I see buyers comes in. Because of this move, I become more cautious, more weary, and not necessary to add. I actually don't like to add to the losers unless I see really good confirmations. If it decides to make a run, that's another story. But right now, it's at this level. Yes, if I sell another 10, 12 delta, the strike over here, down here, and the chance of it doing that, who knows, 50-50, 60-40, really depends on other factors too. Besides, this is a cash secure put. Basically, I'm using it to actually pick up more stock if it's a good point to pick it up. And I have to decide towards the day of expiration if I want to exercise. Well, if I want to leave it and exercise, if it strike below $34, do I want to buy more of that? And so there's a lot of factors going into it, and it's still very early. I mean, it's still way early. I think it's just a knee-jerk reaction unless there's something more hidden in the background that haven't been announced yet, haven't came out yet. And people either know, decide to, hey, I don't want to hold this risk. Could be that too, or it could come right back. So wait for confirmation. That's all. That's that. So we will leave that. And with that being said, one last thing is I want to also introduce a couple more technical indicators overlay. Donchian channel, that's just what I have, which is a volatility based channel, and ATR, average true range, which is more of also a volatility thing. Right. So looking at the Donchian channel, wow, it's sitting way at the low of that channel. What does that mean is that this is not a long candidate. If it's above the middle line, yeah. It's below the middle line, is in a bear territory, right? On this. And ATR has remained high. Ideally, actually, what you want to use ATR is that when it continues to decompress at low level, you wait for it to break out. Wait for it to cross the middle, and then you wait for a breakout. Right? This channel and this bar, as it spikes up, the ATR spikes up, and is on top, upper portion 50% of the Donchian channel, and there's a breakout right here on this. If I bought into it and stay with the tray, and stay with this tray until it crosses back down. The Donchian channel is great for trend following. Also, and it used volatility based range. And you cope that, but by itself, alone by itself, it's not sufficient. Right? So right now, what does this say? It broke down. That's a short. So I won't add to the position. I will leave the original position until it becomes normalized. Right? Because if I go in now, that's thinking of the reversion to mean. Right? A contrarian trade. Right now, the short term is on the depressed level on top. It broke down. Right? It broke in this. In that sense, is that where you sell short. But here's the thing: I won't sell short because the ATR is at a high level. It doesn't depress and then break out. Ideal breakout is it goes sideways, and where everything compressed, totally compressed to a very low level, and then it make a move. Not when it's high and it's just counter trend reversal, and then it might counter anytime again. In that sense, this is how you use this. So I want to introduce this as more breakout and trend following trade. On top, this is a more I would say adding the tools to already the basic fundamental tools that we have. The false hammer, reading the market, reading the bar, looking at doji style, looking for buyers comes in. Now you're going to add the other element to it. You want to see a trend following element on that. But because the false hammer is actually a trend following technique, so we're adding more tools to this. Ooh, my favorite place, Tasty Tray. Yeah, love those guys, I have to say. We'll continue slowly. I'm going to build up the toolbox you guys need to work this out. So first, understanding the basic trade parameters, false channel, reading the candlestick, using moving average. Now we're adding another level, more intermediate level of volatility channel, plus average true range, which is also a volatility level. This is the range base. If your range is narrower, the volatility is narrow, so it will compress down. Now volatility spiked, so it's over here, it continue to climb, and that's a trend following indicator as long as it stay above on the upper channel until it crosses back over. Now is in the bear space. And there's more seller of this now, but the main trend is still intact. So what I want to do is I will just continue to look for false channel. Right? I mean the false candlestick, and then overlay the Donchian channel to help as we're going to other trading positioning, adding more trend following types instead of just high winning trade, very high probability, but your risk rewards if upside down. Now we're going to slowly move towards direction is the trend following, where you take a lot of small losses, but your big one is kind of like hitting the lottery. Right? So you add those two elements. You have your brand broader, where you have high probability trade that you will win 80%, 86% of the time using options, but you gain very little and your risk is pretty high. Right? Now I'm going to flip that using the other side of the trend, trying to find what it meant to be is you want to go for the home runs, right? You want to go for the big one, right? That is the other aspect that we combine these two together. Right? Now you have the basic and the intermediate, level 1, level 2, I would say. Right? Nothing's really basic, nothing's really intermediate. We're just adding more tool set, more ways to find trade, more trade into the arsenal. Right? That way you can make your small steady one. Right? But once in a while we get hit on a small steady one because your risk reward is upside down, is that you take a lot of small win, but once in a while you gotta take the big losses. That's the nature of risk and reward. We'll all flip this. Now you would take small losses, and then you got these big win. You combine these two together, you become very well-rounded trader. In that sense, you have two tools. You're using options, using the outright underlying, using all these technical indicators to help you filter and find even better trade. Now, the ideally trend following is that you stay with this trade. Not only stay with this trade, you actually add to your position. You add to your position when you have a candlestick like false hammer. Then, so basically, on this trade is that you have a compression, the sideways, and then it breaks up. And it ATR picks up, which makes perfect sense as the range could expand, and then you have the breakout bar, next bar, and make new high. You enter this trade, you stay with it because you're still above the upper 50% of the Donchian channel line. Right? And then you look for place to add. This, the false hammer, you'll add. You might add here, you might add here. Right? You want to add at least 1 or 2 times until you cross back over, then you take out the trade. You compound it up. Right? Instead of compounding down, compounding up is very advantageous, I would tell you. That's how you make a lot of money. Right? And that's how you offset the bigger losses that you have on the high winning trade, high winning percentile trade. It's a learning process, but this is how you need to continue to add tools. You don't just have screwdrivers in your toolbox. You have a lot of tools in your toolbox. Same thing in trading. But you have to build and see things very clearly first. And you need fundamental reason, principle behind why would these work. As I always say, I'm a trend follower because economy grow over time, and even just close my eye, buy and hold on the S&P 500 over the time of 30, 40 years, you make really good return. You double, triple, quadruple your investment as you add it over time. And then you add the trading elements into it as a return booster, or even when you see the big trade comes in and you power it in and make yourself wealthy and retire early. Right? That's trading. That's being a hedge fund. In the end, it's about making the big money. Right? You want to make the big bucks? Well, do trend following. But before you can actually do that, you need to pick up the basic element. You know how to read the chart. You need to learn how to look at buyers and sellers, look at the levels, the resistance, the support, the moving average, all the basic stuff that everybody look at, and then you start refining yourself, refining your techniques, and add different indicators that make sense to you. That will complement what you already know, in that sense. And you always need to be on the lookout, always research, always updating, and what works, what doesn't work. And take experience, they take time. But once you learn it, you know, okay, these make sense. Look at this one. This three thing, also volume spike, that's a real move. Volume spike. Volume spike, that's a real move. That's why it's depressed. That's why I am not going to add to this position yet. Have it stay up there, that's fine. And then I see bias comes in, then that's ideal. Right now, no, that's not ideal on this. So, yeah. So we're going to leave this, see how it plays out. Right, volume spike on this down move. On below of this. So, hey, don't add yet. Even if you see bias comes in, you have to be more wary. Now this is different. BYDDF. You have this, you have this, you have a doji star, and then you have this. This is upside down hammer though, but it's still seeing bias. So let's see where it closes. Ideally is, now here's the thing. You have this up channel, and then you do this. Right, sell off, and you see bias comes in. Right, but it will be below the 50%, on the bottom 50% of the Donchian channel when you do a false hammer trade. Remember, it won't be above. Above will be already took a majority of that, recovered all that. Right. So, but you have to be aware of that bigger trend before that. So this is a pullback, and this is a counter to the pullback. Right? The bias is still here. And you can see this, you can see it. So this actually, right here, although it's bottom 50% of Donchian channel, that's a long candidate actually. Yeah. Actually, right now I'm already thinking, I think I'll lie is, do I have a trade on this guy? I might actually have a trade on this guy in that sense. I might have to think about actually open a position. Again, it depends what it does today. But it is. I'm trying to find that arrow, the up arrow indicator. I forgot where was it that I found it. Where's that little triangle symbol? There we go. Symbol. I think it's under symbol. Okay, yeah. There we go. Yeah. So I'm going to mark this as a buy candidate. Not only as a buy candidate on top. I think fundamental wise, it's still too early. Although technically it makes sense on this, but it depends on where it ends. So I would make it a little bit smaller for now, and see if I can see anything more confirmation. This is a good confirmation as a whole, but fundamental wise, a little heavy. Okay, just going sideways. It's gonna hold on these areas, so that's fine. Okay, so that's the Donchian channel, and you can look at the bottom market on this. They're all sitting at the low of the Donchian channel. So they yeah, that's up, and then I mean you have these false signal, right? You have this false hammer, bought, touched the top, came back up, and then do this, and then it broke down. So either you set your stop loss right below the Donchian channel line, or at the low when it touched the low, one or the other. But that false hammer will be a losing trade on the Nasdaq actually. Yeah, So what I'm trying to say is the macro environment. There's no wind behind. Not like during the first half year of 2023. There's a lot of AI money going in right now. It might do a double bottom. Who knows, right? So this is why you want it to be above. You want the bull market to really pick off to help you on your longs, right? In that sense. So if it picks up again, you want it to stay above the upper half to really go heavy and long. Right now, there's no trend following trade because it's below. You have to be above, remember. But if it cross above, you can even open the trade like this and break. That's the trade. That's the trade and ride it up. Yes, it does this, so you have to give it room. And you have to give him not just crossover and then you decide, oh, that's your stop loss. No, your stop loss should be below the level, like here and below. Right? So when this cross back over, that's the trade. So now, since it's on the bottom of the Donchian channel, we'll wait for the bottom market to cross back over. Then we enter the bull trade. If it stay around here at this level, right, like this is when the bottom market is on the bear mood in that sense. So we're adding this to help us refine our trade, to better selective on the trades, right? Not just on candlestick alone. And you see, using just a candlestick alone, you will be taking pain, like the Neo, like the Lee, right? Those two. Like last one was Neo, this one is Lee. Because the bottom market is just depressed right now. It's below, it crossed back below. And it will switch in between throughout the month. It could do this. So it also tell you how heavy you can go. You can still take the trade. You can still take a long one on low level on the Donchian channel, but you don't want to go heavy. You don't want to take the big ones until it revert back to the upper half of the Donchian channel in that sense. And right now, ideally, it's actually that ATR dies down and the market goes sideways and holds sideways for a while. That will be ideal instead of just coming in, really coming in. Right? So that's what we set up. This is the last week of September. And the overall macro theme now, notice I'm starting to develop, giving you ideas of giving you macro theme is just reading candlestick. Right? Candlestick alone is just the daily bar, the hourly bar, intraday of the week or so. That is a very shorter time frame than the macro theme, which is could be weeks and months long. Right now, the macro theme is I want the market to go sideways if I want to be bullish for the bullish trade. It continually comes off, then I'll read what stock has buyers and what stock has sellers. But I will not enter bull trade in this sense. So on that, as you can see over time, we will continue to develop our trading techniques and the fundamental analysis, the macro play, macro view, and all that. And they all will come together over time. As the channel, as I continue to put more and more video over time. Right? And it's intended to take from zero over time slowly and build to everything. Right? So now we're adding another level, the level 2. We start developing macro view. We start adding more and more building blocks to our trading. Okay, that's about it for today. I'm very happy that I get to introduce tools and indicators and macro view into our whole trading, to be a complete trader, to be a complete market speculator. And we'll slowly put in all these different building blocks into it. And over time, I don't know how long. Sometimes I'm gonna go faster, sometimes I'm gonna go slower. You'll get very comfortable with this. But the whole idea is we'll start using this another level, adding the Donchian channel, adding the ATR, adding the macro view to our trading, and to help develop to become a very well-rounded and very informed speculator, market speculator, or market operator, however you want to call yourself. Well, that's it for today, and I will talk to everybody on the next video. Thank you for watching.